All right, good evening, everybody. It is Saturday. I think it's November, 26th now? 2022. It is a beautiful Saturday night here in New York City. We are actually reporting live right here from Union Square, 14th Street. I believe they're just closing down the holiday market here at Union Square. Real quick, this is one of the best Barnes & Nobles we have in the entire city. It's 4 complete floors, and I think it has the best selection out of any Barnes & Nobles in the city. I think the second best would probably have to be the one on 86th Street, which is the Upper West Side, and then the one near my old office. I think it's 45th Street and 5th? Something like that. Anyway, hopefully you guys had a fantastic Thanksgiving, and hopefully all of you are having a much better and improved upon long Thanksgiving Day weekend. Now, I think what we're going to do tonight, since it is Saturday, we are going to walk over to the High Line. Now, usually we tend to stream a little bit too late at night, but I think they're going to keep the High Line open a little bit longer. Last stream on last night. So tonight, I do want to talk about the yield curve a little bit. How can we interpret the yield curve in the appropriate way in order to use it as a leading indicator for financial markets? We'll sort of talk about how the bond market works, and then we will talk about some valuation metrics. Now, we know that, I'll give you a quick shot at I think this is a hotel here, Union Square. We'll talk about some valuation metrics tonight as well, as it relates to the S&P 500 forward PE multiple, or forward price earnings ratio. Now, we have rallied about 530 points, I believe, from the lows, or about 15%, which means, as the price of the S&P goes up, it is now more expensive on a relative basis as it relates to 2023 earnings multiples. We'll talk about that, and we will cover the individual components of the Dow Jones Industrial Average, or the Dow 30. Now, if you noticed, the Dow Jones Industrial Average has been the leading indice out of the main 3 that we look at. Right now, there's many more, right, such as the Russell, NASDAQ 100, but we tend to look at the S&P 500, the Dow Jones Industrial Average, and the NASDAQ Composite as the 3 major indices here in the US. And it seems as if, at least in this bear market rally, some of us on Wall Street are calling it a new emergence of a bull market. I'm not so sure that's the case, but we'll talk about it. But the Dow 30 has been leading by a big wide margin. And then it has been the S&P 500 and then the NASDAQ. So we'll talk about why that may be and how it relates to interest rates. But first, let's see who we have in the chat. I see NFT is here. This is First. Good to see you, NFT. See Mary Cruz. British Gray is here. Hey, good to see you. British Gray is joining us from Tampa, Florida. Always appreciate seeing you here. Spencer is here. Says, yo, Tom. David Kish says, hello from artist community of Carrizo. Wow. Where is that? Hold on. The chat is getting away from me here. Mark Lee is here. Welcome. Katie Savi. Rich Child 9. Aaron Frazier. Chris Beeman, my good friend from Arizona. Hey, Chris. Hopefully you had a good Thanksgiving. NMB 045. This is happy Saturday night, Tom. Good to see you, NMB 045 from Canada. Susan Wallen says, evening, Tom and chat. Cal Reevy, welcome. Vinny Castellano, please send my regards to Maria. We are right here on East 15th Street, but I think we're going to start to cut over to the High Line. Dan Zhang says, Tom, how was your Saturday? It was pretty good. I spent the day kind of just relaxing. I watched some of the World Cup. I watched the Argentina game. Messi played a really good game. So I watched that, and then I did some studying, some reading. What about you? SME Media, welcome. Good to see you. Billy, this is happy Sunday. Junior, 21 Jump Street. This is Tom checking in from Barbados. Always love to see that. D Street Media, welcome. Sabrina Fair, Sally, Tito, De La Rosa. Good to see you, Tito. And Chad is here. Welcome. Hawaii says, "Hola, Tom. Taxi cabs says, hey, Tom, can you explain the Russell 2000 as it pertains to the market overall?" Yeah, so it's just the Russell 2000 is another indice, right? But it tends to be of smaller cap, mid cap companies, as opposed to the large players. So they sort of just break it down by market capitalization. But very seldom do we look at the Russell. Sometimes we do. Now, we have covered on the live stream before the issue in an interest rate rising environment and a lot of these smaller cap stocks, more specifically as it relates to very high beta speculative growth stocks that don't have any present earnings, right? And we're going to talk about that tonight as it pertains to this rotation we've seen, right? And that is why the Dow 30 has been leading this market higher, and the NASDAQ is actually lagging, because we are in an environment where the Federal Reserve is setting monetary policy to be a little bit tighter. Interest rates are going up, and as it pertains to some smaller cap, mid cap companies, especially those that are considered zombie companies, in which case that means their business operations are predicated on taking out additional debt at low rates to service their existing debt, right? Now, obviously, that sort of business model only works when interest rates are suppressed, right? But now that rates are going up, that's a big problem, poses a big problem for those companies. Edward Adams says, "Good evening, Tom and everybody. I'll be in and out this evening, but my TV is on you." Thank you, Edward Adams. Hopefully you have a good Saturday. We are now on the westernmost side of Union Square, 14th Street, and we're going to cut all the way over. Hopefully, we'll just make it. You know, you could see a teeny bit of the One World Trade Center all the way in the back, but hopefully we'll just make it before they close down the entire High Line tonight. Mike C says, "Tom, do you think rates in the U.S. could ever go negative?" Some point in the long-term future, maybe, but right now, definitely not. You know, I think the Federal Reserve has been very clear that interest rates are on a one-way trajectory, and that is higher. Now, last week we did hear from the Federal Reserve as they released their minutes from the last FOMC meeting, but you know, some people on Wall Street were interpreting it as quite dovish, right? But it's real no new information that we haven't already had, right? Now, in 2 weeks, you know, we're going into the last week of November, first 2 weeks of December. December 14th, December 15th is when we will hear from the Federal Reserve again at the FOMC meeting, and that will be when they make the decision if they are going to raise interest rates by 50 basis points or 75 basis points. Now, if you look at the futures market, it looks like they're pricing in an 80% probability of a 50 basis point rate hike. Now, the markets have been getting all giddy about that, right? They've been rallying off the back of that. But at the end of the day, if we paid attention and we listened to what Federal Reserve Chairman Jerome Powell has been saying, it's not so much the rate at which rates increase, it's they're going higher, right? So even if we increase by 50 basis points and we do that for the next 2 years, well, the Fed funds rate could get to 7%, right? It's going to get there one way or another. You know, I wanted to point this out. This is the New School. It is right here on the corner of 5th Avenue and East 14th Street, or I should say 14th Street. It is one of the most, I think it's one of the most famous and prestigious design schools, not only in the entire city, but I think the entire world. Some very talented students go here for architectural design, all types of design. Very unique building too. It has a really nice view of the One World Trade Center. Yeah, Mary Lamb, what's up? Says Tom, be careful. Remember the last time you were on the High Line. It's a good point. Long Island Duck 52 says, good evening all. Hey, Long Island Duck, welcome. Dusty Cole, good to see you. Says, hey, Tom, Cat, and gang, how are we? I'm doing good. How are you? I'm doing really good. Smee Media says, congratulations, Tom, on reaching 25K. That was such a great message you sent a few hours ago. Yeah, it's crazy. I think we hit last night on the live stream. Whoa, look at this view of the Empire State Building. That's fantastic. We hit 25,000 people on the channel, which is just unbelievable. So I really appreciate everybody joining and participating. I think it's a really, really fantastic thing we're growing here. My friend Fabio is here, says, hello everybody. Tom, do you recommend a particular broker-dealer / bank for trading and other investments, maybe one of your own? I was thinking about Interactive Brokers. Yeah, so I can recommend specific brokers, but I can't recommend specific investments. What I will say is, what I personally use is Interactive Brokers and Charles Schwab. I would stay away from all of the discount broker dealers, such as the Robinhoods of the world, as well as Webull, really any of the scammy or spammy brokers. I actually think they're going to be in for quite some hardships over the next couple years, right? I think that, coming off 14 years, look at how cool the design is on this building, by the way. This is the new school. I think coming off 14 years of very, very intense quantitative easing has brought about a lot of these discount broker dealers that have been sort of making and marketing, I think, and I think these have been very unethical marketing practices. They've been marketing investing and trading as sort of like a game in a casino to younger investors, right? You'll sort of notice the interface of Robinhood. It's, blowing confetti in your face whenever you make a trade. And it's really kind of bizarre, actually, seeing sort of how all of that evolved. So I think as long as you just stay away from those type of institutions like the Weebulls and the Robinhoods of the world, I think you'll be fine. Because, yeah, I think I've been pretty clear on that. I think they also project and encourage the wrong message as it relates to investing to younger people. And it's so critical when you're young that you learn the fundamentals of how to evaluate businesses and invest for the long term. Because obviously, if we think about compounding interest, the number one variable or component in there that is the most precious is time. And when you're young, whoa, this is a Guitar Center. When's the last time you've seen a Guitar Center? Anyway, sorry, I get distracted like crazy. But yeah, I think Robinhood is encouraging that gambler's mentality, right? And encouraging, 18-year-olds to speculate in the options market when they don't even know how these derivatives are priced. It's kind of weird and almost, it feels unethical to me, but yeah, if you just stay away from them. Hey, Yaga is here. Welcome, Yaga. Hopefully you had a good Thanksgiving weekend. Sabrina Fair, Austin City Limits. Good to see you, Austin. Welcome. Using people says Thinkorswim sucks. That's okay. Thinkorswim's not bad. That's a TD Ameritrade, I think, platform. JPJ Autotech says, do you think Peloton will go bankrupt next year? I made a huge mistake investing it almost 2 years ago, and I'm surprised they're still alive. Yeah, so, Peloton was one of those, what we talk about, those COVID darling type stocks, right? Now, the reason why I don't, what's going on over here? Lots of horn honking up there. I think the reason why, for me especially, I tend to stay away from too niche specific companies like that. Just because it almost seems to be a little bit of like a fad, right? Now, Peloton may be a great product. I know people who have Pelotons that like it, but at the end of the day, it seemed as if the stars aligned perfectly at the time for explosive growth, because nobody else, you literally couldn't go outside and do anything, right? You couldn't go to the gyms to work out. It was kind of a weird time, but we all knew that that wasn't going to be the norm forever. So what you had is you had about a year of explosive growth and what I like to call pull forward as it relates to revenue and earnings growth. Well, the company never had any earnings, into about 12 months. So you had about 5 years of revenue trajectory condensed into a year. So multiples on the stock went crazy. But once they started reporting earnings with sales deceleration, well, then analysts revalue that company, and you go through huge compression, right? And then once interest rates started to go up, especially, I wrote a piece about this about a year ago in the Behind the Street newsletter, that at the turn of a major credit cycle, right? So at the end of a major credit cycle, the first stocks to drop, or the first stocks to really get hit hard, once interest rates start to go up. This was the apartment building we were looking at the other day. We were talking about how unique it is. Look at it. It sort of looks like the Jenga building, doesn't it? The first stocks to get hit at the turn of a major credit cycle are very high revenue growers with very, very little earnings, or earnings projected out into the future. And the reason for that is because if you think about how interest rates impact corporate earnings or impact corporations, investing is all about valuating future cash flows. What is the value of a business's future cash flows? And as interest rates start to go up or increase, the present value of those future cash flows are worth less. So you have to have these stocks be re-rated. And that's why, one of the things we were going to talk about tonight is notice the stocks that are trading near their 52-week highs. Notice the stocks that have been doing really well are the stocks that have been consistent earnings growers and not the fast, 200% revenue growers with no earnings, sort of like the loss leaders, right? So if you take a look, one of the things we could do, and this sort of ties into the Peloton question, if you Google, and I think it'll bring you to stockcharts.com, something like that. If you Google components of the Dow Jones Industrial Average, it'll show you the top 30 components of the Dow. Now, notice the top 10, I would say the top 5 or 10 companies in the Dow Jones Industrial Average, and compare them to the top 10 companies in the NASDAQ. And it's a no wonder why the Dow is leading in this environment. Hey, RS is here. Good to see you, RS. Hopefully you had a good Thanksgiving. So this is the building on the corner of 14th Street and 6th. Very unique looking design. And I think we passed by this building maybe about 2 or 3 weeks ago. And they are making a lot of good progress on it. Now, I think somebody in the chat, it may have been photos from around New York. I think the cheapest unit in that building is going for like $1.5 million, which is kind of crazy because, not gonna lie, this neighbor is a little bit seedy, to say the least. Hey, Paul Greenwell, good to see you. Daryl is here, says, hey Tom, good evening. Daryl is joining us from Chicago. Good to see you, Daryl. Tool Freedom says, how does Guitar Center stay in business? I'd be interested to see what Guitar Center's revenues are like online. They probably do a lot of online business, no? Michael Dwyer says, Tom, stopping at a Guitar Center like you did, struck a beautiful chord with everybody on the walk. What was that? Donna and I are looking forward to the rest of the night with you. Hey, thank you so much, Michael Dwyer. Speaking of Guitar Center, I think there's one right next to the New Yorker Hotel, or like a couple blocks down, right next to Madison Square Garden. So Mike Cease's Guitar Center also owns Musician's Friend Online retailer, wow. Yeah, I'd assume those stores like Guitar Center and the like probably act as sort of like a showcase for people to shop, try out things in person. And then they actually probably do a lot of volume online, I'm assuming. War Walker, welcome my friend. Hope you're well. In the 305, John says hello. Have a nice stream. Do you recommend any books on investing in the stock market? I do, there's a couple. If you want my book list, if you scan the QR code on the screen, it'll bring you to the Behind the Street newsletter. The last newsletter that was put out about 4 months ago now, I included the top, I would say 5 books that I would recommend you read. So if you scan that, you'll have a list. Trap News says, hey Tom, do you know who Patrick Lopez is? Oh, the streamer, yeah, of course. Yeah, sometimes I'll watch his stream to try to learn Spanish. Yeah, it's weird. When you hear somebody speaking very, very clearly, especially in other language that you're trying to learn, if you just have it on in the background, you start to pick up different keywords, learn pronunciation better. The RT440 says, Tom, I go to Guitar Center and Sam Ash. Great stores, and yes, Tom, you are right. You could use the stores to see the instruments and then purchase online or vice versa. You know, the RT440, I think I may have misspoke then, because the music store next to Penn Station, I think, is Sam Ash. I'm actually curious now. I'll have to Google it when I get on the train. But take a look at this. If you look all the way down, you could actually see all the way to Times Square. It's a pretty clear shot at it too. John Legs says, thank you very much, and I appreciate your videos. Thank you for being here. TC is here. Says, walks from Wall Street. I've noticed it the last time I visited New York City. Have you noticed a difference in city in the last 10 years? Oh yeah, I have, for sure. For sure, 100%. Yeah, I mean, things change, the city changes, you know. Bruce Wayne, good to see you, welcome. Stephanie is here. The Great Invisible says, hey Tom, good to see you from Nigeria. Welcome to all our Nigerian viewers. You know, so real quick before we get right into it, anybody take some time today to watch the Argentina game? That was a pretty good game. Really, really good game. So congrats to all of our Argentine fans. Messi had a nice goal. I thought they played really well. ATC says, nice view. Good to see you, ATC. Now, the United States, they play Iran, right? On Monday. I think we're up on Monday or Tuesday. Yeah, Dusty Cole says, I watched it, Tom. So glad they won. Yeah, and the stadium was packed too, because I think this is going to be the last World Cup that Messi ever plays in. So it's definitely a historic one, for sure. Gary Carpenter's here. Nick, welcome. You know, speaking of Monday, everybody, that is Cyber Monday. So if you remember from last night's stream, we were actually talking about some preliminary data coming out of Adobe for Black Friday sales. I'm actually going to talk about some data coming out of Shopify a little later, but on Monday, it's Cyber Monday, which is, I think, one of the most newly created quote-unquote holidays for shopping online. Now, we do have some projections here, and I think it'll be interesting to see how this plays out. But for Cyber Monday, sales are expected to drive $11.2 billion this year for Cyber Monday. That would be up 5.1% year over year. And this is during a time when consumers are battling inflation. I think I read something today in Investors Business Daily that the average 401k balance, which is, you know, the major retirement accounts, are down roughly 23%. So the average 401k balance is down about 23% for the year. And it seems as if consumers are still spending strong. Athora says, hey Tom, when are we gonna have a stream from the financial district? You know, we may be down there tomorrow. So I was thinking about going down there today, but I was just so caught up. I was doing a little bit of work. I was doing some studying here, but we actually may be down there tomorrow. So hopefully we'll be streaming outside from Federal Hall, which is right adjacent from the New York Stock Exchange. Then we'll probably walk over to Broadway and we could explore around there. So probably tomorrow. Will M says, I'm intrigued by the idea of retail locations as galleries for online sales. Got any related retail versus online sales stats? And do you think it affects the distribution of retail locations? Well, I read it. There's a really good article, and I think I actually put the link. I forget which Nightbot command it was though, but I think Barron's did a study, and this mainly relates to more high-end or high-scale storefronts that increasingly they're sort of like loss leaders, right? Now, I think it's safe to say that everybody knows what a loss leader is, because e-commerce is absolutely destroying brick and mortar businesses for obvious reasons. But in major cities like New York, London, like the big tourist attractions around the world, it's almost imperative that big brands have a retail presence, mainly as just sort of like a showcase to display their newest trends, some place for tourists to check it out. But they've actually seen higher conversion rates online than actually in store. So it's kind of interesting. Now, if you want to take a look at some data we're getting out of Shopify, and this actually dropped via Bloomberg earlier today. Now, Shopify announced their Black Friday sales, and it was another record breaker. So last year was a record breaker, and this year was another record breaker. So Shopify recorded record-breaking Black Friday sales of $3.36 billion. That was an increase of 17% year over year. That's pretty substantial. Now, I'm assuming we'll probably get some data here from Amazon if they disclose it. Now, if Shopify had about 17% year over year revenue growth for their Black Friday, I'm assuming that Amazon is probably going to do a little bit better than that, actually. Yaga says, is it cold today? It's actually not. It's pretty warm. You know, walking around during the day in the city today, it actually felt like it was in the 50s. You know, usually when I do these streams, I wear like a Patagonia vest and then another jacket over it. And I actually had to take the jacket off today because it kind of felt hot when you were in the sun. It was weird. Will M, thank you. Joseph Hardaway's Home Depot went hard for Black Fridays yesterday. Probably beat Lowe's. That's really interesting. So what, they had a lot of good deals there? Cooking Bro says, how do you like Patagonia? I like Patagonia. I think it's some of the stuff you could wear also as sort of like a business casual, I guess. But I mainly only wear it when I'm in New York, just because it gets a little bit colder here, obviously. Joe Driver says, hello, Tom and team. Today was Small Business Shopping Day. Good to see you, Joe. I didn't know that. They should probably market that a little bit more aggressively. I didn't know that. Thank you for informing us. Tampa Cocoa Beach says, Dalva from Brazil says hello. Good to see you guys. Brazil, talk about another great World Cup game. Anybody watch the Brazil game? That was an incredible goal. So good to see everybody from Brazil. Ian says, what price are you a buyer of Bitcoin? It's a good question. So I think I've explained my personal view on it before and how I approach it. Now, I think it's pretty clear to everybody that I am not a fan of a lot of the alternative, I guess you could call them coins. I don't really like calling them coins because they are securities in my book. And that's probably the number one reason why I tend to stay away from them, for obvious reasons. But the one thing that drew me to Bitcoin specifically, right now, there's different value propositions for everybody. There's some people that are watching the stream that thinks Bitcoin is a scheme and a scam. And if that's the case, then you probably should never buy it, right? But for me, where I found value in it, and I've been involved in the market since late 2014, early 2015, is the idea of unconfiscatable money, or at least having a small portion of your net worth in a vehicle that is truly unconfiscatable, right? That's just my personal view on it. But I don't try to coerce other people to buy it. It's really not my line of business. But I think over the years, especially leading up to 2017, I think a lot of this space was hijacked as a way to make a quick buck and market sort of these MLM style pyramid-like schemes. So I think you really got to watch out for that. One of which we just saw blow up, which was FTX. But what I do is I agreed on a percentage of my net worth to allocate towards Bitcoin, not as a speculation, but to say, okay, do I want 5% of my net worth to be in something where if I own the private keys, there's no way for any government, any nefarious actor to get a hold of it. It's totally unconfiscatable. So I decided on a percentage, right? And assuming when the markets go down like they've been going down, that brings my allocation below my agreed upon allocation, if that makes sense, right? So I would have to add to the position. But when you have these big bull runs like we had leading up until the Fed started tightening, well, if my allocation is 5%, oh, that's so funny. Speaking of Patagonia, it's right here. If my allocation is 5% and Bitcoin goes to 70,000, well, it's actually probably going to be 15%. So I got to trim that position down to 5%. So that's how I sort of manage it there. But hopefully that makes sense. Oh, check out these cobblestone streets down here. Really, really beautiful here. Very seldom do we come down here, so it's actually kind of nice to take a walk around. All right, Washington Street, we should be near the High Line soon. Yaga says, what do you think about drop shipping? I don't know anything about drop shipping, to be totally transparent. So I couldn't advise. I literally know nothing about it. Drop shipping as in what? All right, let's see if we can make it up. I have a feeling once we get to the top of the High Line, there's going to be a barrier that says it's closed. Hopefully not, because I really want to take you guys up here. You're going to see an amazing, amazing view. And it's kind of cool. I think we could walk all the way to the Hudson Yards from here. Wow, it's kind of dark. I don't think we've ever been up this path. You know what? It's open. Nice. This is going to be good. All right, guys, this is the High Line. Here, let me give you a shot of the Hudson River. You know, I think this is actually Pier 40 or Pier 57. Pier 40 is over here. This is actually where I used to play soccer. We'd have some soccer games here in my college days. Really, really nice up here. A little windy, but pretty beautiful. If you look all the way in the distance, it's actually New Jersey. But take a look at how unique some of these apartment buildings are. Very, very different type of architecture. Hey, Steph UH is here. This is beautiful views. Good to see you, Steph. Welcome. Now, I quickly want to cover just one thing as it relates to valuation. But first, I'll show you where we were walking from, just to give you some perspective of how we got here from 14th Street. So this is the view looking over 14th Street here. So we came all the way from here, walked down here, came up the stairs. So there was a research report out by Morgan Stanley, okay? And this is so funny because we've been talking about this all the time on the stream. Morgan Stanley is forecasting a 20% EPS or earnings per share decline in 2023, while the majority of Wall Street has not discounted earnings or an earnings contraction at all as it relates to the indices like the S&P 500. If you look at the estimates right now, consensus is actually for a 5% EPS growth in fiscal year 2023. Now again, it's possible, but I highly, highly doubt that. Based upon how things have been going, I think that Morgan Stanley is going to be a little bit closer than consensus now. So the problem with that is, if you think about where we have rallied to, okay? So think about when this rally started. I would say about 3 weeks ago now, maybe a little bit over a month. I have to go back and look. But we've now rallied on the S&P about 534 points to that key level 4,000. I think the S&P closed at 4,026. So that's a 15% move off the lows. Now, what does that mean? Now, if we remember back a month ago, we were saying, okay, the S&P 500 is trading at a forward PE multiple of about 16, which actually is relatively fair priced. You know, statistics show that if you're able to buy the S&P at a 16 times forward multiple, over a 5-year time frame, you're probably going to be in the green, and you'll probably make money. But since we've rallied, well, look at this. We've definitely not seen this before. Seems like some sort of a venue, doesn't it? But since we've rallied from the lows, the S&P 500 forward PE multiple is 19.49 times 2023 earnings, which in this environment, I think that's pretty expensive. So just be cognizant of that. Hey, Zozo Bob is here. What's up, Bob? Thanks for joining us as we are here on the High Line. I'll give you guys another shot of the street view here. Joe Driver, good to see you. Wendy England, welcome. Abdullah. I know, Edward Adams says that whole area used to be a hellhole. What a 180-degree turn. You're 100% right, too. They did a fantastic, fantastic job. And from the High Line, you have amazing views in New Jersey, too. Really nice. So the reason why I bring it up is because let's assume that Morgan Stanley is correct and that there's going to be a 20% earnings recession in 2023. Let's just assume that. If that's the case, well, the S&P is on a forward basis, on a forward earnings basis, is a lot higher than, is trading at a lot higher than 19 times forward earnings, right? Because if earnings estimates are cut and they go down, well, then you're paying a lot more for a lot less earnings. So I think that is, markets seem to be ignoring it for now, but, we'll see as the weeks progress and as we go through the next FOMC meeting, if we get any sort of direction from Fed Chair Jerome Powell, any additional hawkishness. I think this could send the markets wailing here. But if not, it is possible. Oh, wow, look at this. Hold on, let me give you guys a shot of the Hudson Yards. So this is actually where we're going. So this will take us all the way to 34th Street Hudson Yards. It's a pretty nice, pretty nice view we have here. And this is Statue of Liberty. But I quickly wanted to mention another thing. So everybody always thinks that corrections in the market are only related to price. But that's actually not true. The two main forms of corrections are price and time. And ever since the 2008 financial crisis, we've only really had corrections in the form of price, not in time. So it's very, very possible. And there's a very famous investor by the name of Stanley Druckenmiller that thinks we are going to enter into sort of a time-like correction, right? A 1970s style market where we just sort of chop around and trade sideways for maybe 8 to 10 years. I think that's very possible. And that is very indicative of a stagflationary environment. Wow, check this out. This building is super unique. Every single unit is like these little pods. You could actually see people watching TV in their apartments. Talk about how unique that is. Really cool. Hey, Bagels and Walks is here. Fed interest rate policy could drive another currency crisis, as what happened with the British pound recently. Says Schnook. Yeah, you're right. I think what mainly happened there, and you're 100% correct, but I think what really caused that massive decline, or I should say sell-off in the British pound. Hold on, let me try to adjust this camera. Or I should say the pound sterling, as well as a huge unmitigated sell-off in the gilt market, or gilts, is because at the time Liz Truss thought it would be a good idea to sign into law or put in place one of the most inflationary spending packages to turbocharge the economy. Now, the problem with that was the market thought it was going to succeed, and it probably would have succeeded by driving economic growth, but there's a time and place for that. And in the UK, I think they're dealing with like 11% inflation. I think the CPI out of the UK came in at like 11%. So nobody wanted to have anything to do with the pound sterling, so the currency started to sell off. But essentially what happened is, with a lot of the pension funds, they started to get margin calls. So in order to meet their margin calls, they had to start dumping their bonds, or gilts, excuse me. And that sort of led to a cascade panic effect where the Bank of England actually had to jump in here. And they're not calling it quantitative easing, but it is quantitative easing. I don't know what else you would call it. But they actually had to jump in here and stabilize the market by buying gilts. When it's interesting because here, really quick, you could see the very, very top of the One Vanderbilt building. But the Bank of England, prior to this massive sell-off, was very privy on following the lead of the Federal Reserve with quantitative tightening and raising interest rates. But it was almost as if they were forced to pivot, or the entire system would have imploded in a way. But you're 100% right. Now, I don't think that could possibly happen here in the United States, mainly because the US dollar is the world's reserve currency. But anything's possible. We'll see. Hey, UniJ22 is here. Says hello, Tom and all. Good to see you, UniJ. What do you guys think about this view of the Empire State Building tonight? Now, could you imagine living in one of these buildings here near the High Line? You have an unobstructed view of the top of the Empire State Building, but also you could see just a little bit of One Penn Plaza and the H&M building too. Really nice. War Walker says the Flintstones building. Yeah, Palmetti says inflation there is crazy. Now I think that's the thing that we need to keep in perspective here in the United States, because even though inflation here in America is unacceptable and it's out of control, in other parts of the world, it is a huge, huge problem. Look at Argentina. We were just talking about Argentina as they played in the World Cup today, but they're a country that's suffering really, really badly with runaway inflation. What do you guys think about the style of these apartments? I guess you could call these bay windows, right? Is that what you would call them? Maybe like bay windows? Deborah says too much exposure from the High Line in those apartments. Yeah, maybe a little bit of lack of privacy, you're saying, I guess. Although you could probably just pull the blinds across. I like the style of the buildings. D says love them. Yeah, Warwalker's like egg windows, barrel shaped. Coffee says very interesting. Good to see a KC Coffee. Yeah, first name, last name. It looks very modern. All of these buildings look extremely modern. Now, for all those non-New Yorkers here, this area used to be very, very different all but 10 years ago. Very, very different. Let's just say that. And now it is absolutely beautiful. All right, we see a Christmas tree in the window. We have to give it a rating. It's a little small, but it's nice. I'm gonna say a 7.3 on the Christmas tree. What do you guys think? Hey, Outer Haven is here. Says, hey, Tom, good evening. Welcome, Outer Haven. Thank you for being here. Patricia Ivory. Welcome. Yeah, Tom G, could you imagine the cost of replacing one of those windows? God forbid it breaks. Bruce Wayne says, looks fake. Yeah, fake trees, automatic 2-point reduction. Mark West says 8. Yeah, let's take a look from this angle. It looks nice. I really, really like the architecture on these buildings. They're really cool. You know what? That'll be my homework. I'm going to do some research and see what some of the rentals are in these buildings. Oh, look at this. We got someone's watching a big movie in there, something. You guys see that? There's like cats running around all over the place on the screen. You know, some of these very luxurious apartment buildings, they have their own movie theaters, and I'm thinking that's what this is. So cool. So from your own movie theater, if you pan to the right, you have an unobstructed view of the Empire State Building. Fantastic. Deborah says, I don't think those are rentals. Some of them I think you could rent. Some of them I think. Yeah, Maryland, maybe like a projection TV or something like that. Michael Joseph says it's called organic architecture. ARB, good to see you. All right, let's continue on our walk down to the Hudson Yards. So I really quickly want to talk about the spread between the 10 and the 2s. So the 10-year U.S. Treasury and the 2-year. Oh, look at this. Let's go up on this elevated platform. Overlooking the parking garage here. Man, this is high up. Pretty nice view from up here too. Okay, so James, as I did research, and it's called the Lantern House. Prices start at 1.7 million. It sounds about right. Sounds about fair. Now, the 10-year U.S. Treasury yield is yielding about 3.691%, and the 2-year Treasury is yielding about 4.467%. So you may be asking yourself, well, that's kind of strange. If I lock my money up for 10 years, I'm getting below 4% yield. But if I lock my money up for 2 years, you're telling me I get more yield? What is that? That doesn't make any sense. Well, the yield curve is inverted, and if you go to cnbc.com/bonds, cnbc.com/bonds, it'll actually show you the entire yield curve. Now, when you go there, not only are you going to see U.S. Treasuries, but you're going to see the German bond market, which is the German Bund, and then lastly, you are going to see the gilt market, the UK gilts. And you could sort of chart and plot all of these yields, maybe in an Excel spreadsheet if you'd like, just so you could sort of see the steepness and the how flat or inverted the curve is. Hey, Sunset Blue, thank you so much for your $2 donation. I appreciate it very much. Hopefully you're having a good Thanksgiving weekend. Now, if we think about in a normal environment. So there's 3 yield curve conditions specifically. Now, the first yield curve condition is what happens most of the time, which is called the normal yield curve. And a normal yield curve is when you have the long end of the curve, right? So you think about your 30-year, your 20-year, your 10-year yielding more than your shorter term, which would be like the 1 month, the 2 month. So you have a steep curve. It's called having a steep curve, right? The second stipulation is a narrow yield curve, is when, there's not too much of a spread between the different maturities. And then lastly is what we are in right now, is an environment called an inverted yield curve. But I don't think it's just enough to sort of say, oh, okay, the yield curve is inverted. It's bad news. I think we need to sort of understand market mechanics in a way, and why the yield curve tends to get inverted in the first place. So the way I like to think about it is this, as we take a walk here on the High Line. Now, in normal times, I want everybody to think like, I would say, a market operator or an institutional investor or a money manager. If you're predicting or you're projecting good times in the economy, you're probably going to want to buy risk assets, right? Which could be things like equities. So the reason why you have a steep yield curve when many market participants are expecting good times, good economic growth, GDP expansion, is because, generally speaking, and first, basic 101 here, bonds move inversely to price. So the bond yields move inversely to bond prices. So if I'm a money manager and I'm expecting GDP growth to be positive, and I'm expecting specific stocks to go up multiples, right? In some bull markets, you could have stocks go up hundreds of percent. Well, I'm going to demand more yield for locking up my money for long durations of time. So if I'm going to buy a 30-year Treasury, I'm going to command a higher yield for that. So I would start dumping or selling off those longer term Treasuries and buying shorter term treasuries because I can manage my liquidity a little bit better and I could go buy risk assets. So if we think about what we just sort of reviewed, if people or market participants are selling longer term treasuries, well, what is the correlation for the yield, right? If bonds are selling off, yields go up. So that is why in a normal market environment, when the economy is projected to be doing good, you have a very steep yield curve. People piling into shorter term duration bonds because they can manage liquidity better, they can move in and out of equity positions. But the opposite is true when market participants are forecasting an economic downturn, okay? They are willing to lock their money up in a bond for longer duration or longer time because they think risk assets are going to do poorly. And when you start crowding in to longer term dated treasuries, well, sometimes if the outlook is so bad, you can have a yield curve inversion, which is exactly what we have now. Now, the most common spread that everybody looks at is the 10 and the 2s, so the spread between the 2-year and the 10-year. And currently here in the United States, that is very, very inverted, which leads many market participants to believe we could be going into a very steep recession. Now, really quickly, this is the Equinox Hotel and Tower. Then you have the Edge, which is one of the most, I would say, sought after and famous observation decks here near the Hudson Yards. Hey, Robert. Good to see you, Robert. Welcome. Destructionist, this area is so unique. I love it. Yeah, I always like coming up here. It's one of my favorite spots in the city, I would say by far. Look at this thing. Yeah, Fabio says, Tom, it seems to be the peak of inflation is already coming to an end. The Fed itself said that the forecast is for a reduction in interest rates. Will we have some degree of recession? Well, I think if we look at the tips, if you look at the tips market is saying exactly what Fabio is saying, like to a T. The tips market is saying that inflation isn't really going to be a problem. And if anything, we may enter into deflation. Yeah, did you guys see that thing? That thing was crazy. It looked like the Tasmanian devil. Roxalana is here. Good to see you. Ray, welcome. Hey, Life, Liberty, and Guns is here. This is Tom. I am going to retire next year, and I am waiting for rates to increase and then to go long. Hey, well, congratulations on your retirement, my friend. That's fantastic. Love that. Are you going to be staying put for your retirement? Are you going to move anywhere? What are the big retirement states? Florida, Arizona. Yeah, Break is like it's the Tasmanian devil. Hey, Julia M. Tom, I was at Best Buy today and the shelves are literally packed to the gills with inventory. So deflation is definitely possible. It's so crazy that you said that, Julia, because I actually had to go into Best Buy today too. I had to buy earphones or headphones. And I got just the basic Apple headphones, but with the auxiliary plug. You can't even find them anywhere nowadays, but I just want a pair of wired headphones. I don't have to worry about charging things. I think it was like 18 bucks. And Best Buy today was packed. I went to the one at Union Square. Really, really packed. Yeah. Oh my gosh. Bree Grams is like, don't move to Arizona. We may run out of water. And that's actually a serious statement too. We've actually did some live streams on that as well. Life, Liberty, and Guns is, I want to move, but the kids do not want to leave Southern California. We want to move back to Louisiana. Wow. Well, Southern California is beautiful for weather. Weather-wise, it's fantastic. Kevin Ramsey, good to see you. ARB says, I don't like Bluetooth. It's just, I'm so horrible with charging things. That's why I need it wired. Will M says, you should get some Cost Porta Pros. I'm not sure what that is. I'll have to look into that. Somebody says, Tom, wouldn't it be safe to say that inflation is the better of the two over deflation? At least for most people in this stream. I don't know. I wouldn't say that. I wouldn't say that. Now, here's been my whole concern, and it's been sort of... I think this is why we need to be very selective with the data, because what did we review when the last CPI report came out? Wait, hold that thought really quick. I never knew you could see the top of the Chrysler building from the High Line, but apparently you can. It actually looks really good. If anybody is new to New York City, I think this is a must see. You got to come to the High Line. It's 100% free. You don't have to pay. And you pretty much just get a overhead bird's eye view of the entire city. It's really unique. Anyway, so my concern...
Sorry, park is closed.
Can I exit here?
Unfortunately, it's closing right now. 26 is open.
Oh, 26? Oh, thank you. Appreciate it. We'll have to exit at 26 and then go up. Now, the problem that I've been seeing in the CPI report specifically is that shelter costs makes up about 33% of the CPI. And I would assume, you know, many people in this chat, I mean, myself, I'll just speak for myself. Shelter costs make up about, I would say, over half of my monthly expenses. And it seems as if the categories that actually matter to everyday Americans, like housing, is actually, we're not seeing it come down. We're actually seeing it accelerate and go back up, which is very, very problematic. Hold on, let me navigate this maze here as we go back down. They're closing up the High Line, so I got to get off. Just give me 2 seconds. Hey, Kristen S., good to see you. Michael Joseph says, yeah, it used to be open till 11. What time is it right now? Hey, Solo Flyers here. It says, hey, Tom, I believe they close the 34th entrance due to a lack of lighting at sunset. It's actually a good point. All right, we'll walk there by foot on ground level. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and hit the subscribe button if you're new. We do these live streams about 5 days a week between New York City and Miami. We'd love to have you guys along for the ride. William Travis is here. Says, what's up, people? Good to see you, William. All right, 27th Street. Mike MTL, good to see you. Yeah, John, I know. Thought they locked me in for a moment. And she's like, sorry, we're closed. I'm like, well, can I leave? Nah, we're closed, sorry. You can leave tomorrow. All right, we're only a couple blocks away from Hudson Yards anyway. William Brooklyn, good to see you. Says, I must ask this, the rent situation, okay, public assistance helps me out. Section 8 pays and HRA pays. When I am working full-time, they take 30% of my income. Now I am part of the problem, says William Brooklyn. Yeah, I mean, rent is ridiculous here in New York. I mean, in the city is really, really expensive. Now, I think, and it's going to sound a little weird, and we've talked about this before on the stream, I really think if major cities come together with the private sector, they can solve this housing crisis we have in America. And I don't think it's out of what's the word I'm looking for? I don't think it's fear-mongering to say we have a housing crisis in America, because I really believe we do. So we talked about Meta, we talked about ExxonMobil looking to reduce their office capacity and maybe sublease a lot of their headquarters because they just don't utilize the space. And you're going to see that trend continue and accelerate for the next 10 years, for sure. So I think if we can have, government officials and the private sector come together and do some urban planning around the specific not apartment buildings, but commercial real estate towers that are vacant, and maybe offer some incentives for developers to do a gut renovation and make them apartments, I think you could actually solve this problem pretty quickly, actually. They're starting to do that down on Wall Street, 95 Wall Street. This is where the guy slammed into the thing the other night. We were standing right up there. You can actually still see the dents in the poles. One right there and one right there. Yeah, Michael Joseph says too much demand, not enough supply of housing is basic economics. Definitely not fear-mongering. Yeah, I agree. And I think if you really look at the problem areas, especially parts of California and in Florida too, it's been governments that have been really hindering or making it near impossible for builders to get the permits that they need to build new properties. So I think a lot of the zoning laws are backwards too. Hey, Dr. Longas, what's up, my friend? Good to see you. Yeah, Jace, there's too many people falling through the cracks in so many ways in our society. We could solve the housing problem if owners or governments would. No, I mean, I really just think it's a supply and demand issue, obviously, but especially in places like California, there's been severe underbuilding, severe underbuilding over the past decade since the great financial crisis. Now, so speaking about that, did anybody see the article that came out? I think it may have been Bloomberg who broke the news that JP Morgan Chase acquired a ton of single family homes. And it was crazy to see that because we've been doing live streams dedicated to institutional investors getting into the single family rental market, right? So acquiring entire cul-de-sacs of single family homes and using them as cash flow producing properties. Now, if we remember from the home builders, right, you think about Toll Builders, Pulte Group, in a lot of their earnings calls, they were saying that inventory is starting to stack up here. And I wouldn't be surprised if a lot of single family home builders start to sell these homes that they can't move because interest rates have moved nearly 100%. I wouldn't be surprised if they do big block orders to private equity firms and other institutional investors, where they'll probably sell 200 to 500 of these homes at a clip for maybe 70 cents on the dollar to institutional players. And the problem is if they do that, right? So everybody's banking on supply to hit the market for retail to buy at lower prices. But it seems as if, these big block transactions, retail is never gonna get their hands on that. These are gonna be sold in large transactions to institutional players to use those single family homes to rent to you guys, people like me, for the cash flow. Hey, Mechi is here. Says, hello, Tom from Buenos Aires. Did you watch the soccer match? I did. It was a great game. That was an awesome game. Yeah, Messi scored today. Who was the other gentleman who scored? It was a good game. Congratulations on the win. Yeah, I was watching it. It was awesome. Let's go inside, just because it's a little bit windy. Oh man, the wind really makes a difference. Huge difference at that. Somebody says, what team is Messi on? He plays for Argentina. I think this is last World Cup too. Brick says the housing shortage is the specific area of affordable housing as it relates to California and not as much as general availability. Ian, I know, yeah. Yeah, NMB045 is a good point. You know, converting offices to housing will also help create construction jobs. That's true. Now, if you want to talk about a big bubble, the Canadian housing market is a massive bubble. Tom H says, hey Tom, thanks for the New York City updates. Retired from New York City for 20 years. Now I live in Wellington, Florida. Hey, very cool. Wellington, Florida, where is that? Is that Southern Florida, Central Florida? Where is that? Fetty F says, hey Tom from Buenos Aires. I'm very happy about the match too. Yeah, I think Argentina was a favorite to win the World Cup this year. You know who also had a really good game today? Saudi Arabia, but I think they lost. But they played a really good game. They had a good match. All right, everybody, now we are here at the shops at Hudson Yards. Yeah, Michael Joseph is totally true about the affordable housing shortage. Plenty of mansions always available if you have the money. Yeah, I mean, I think you could say the same thing about New York, right? Now, I think we've actually covered this on the stream before, where a lot of those buildings on Billionaires Row, you know, if you just do a quick Google search, if you go to apartments.com, there's tons of vacant apartments. You know, they actually call them the piggy banks in the sky because foreign investors will actually just purchase these multi-million dollar, sometimes $100 million apartments, and they'll never even visit them ever. I think the record sale at 432 Park Avenue, I heard the owner has never been there. So he just parks 80 million and he's never visited the place in his life. It's kind of crazy, but there's a lot of money in the real estate development. And if you think about this from a global macro perspective, you know, if you are a Russian billionaire and you're trying to move, you know, a good portion of your net worth out of the country, well, then why not park it 80 stories above Central Park, right? It's a very safe place. The property's never going to get damaged. Nobody's going to steal any of your stuff. So it's a good place to park money. Brendan O'Brien says most owned by shell corporations as well, money laundering stuff. Yeah, I mean, that's been definitely a big issue too. Now, I'll give you guys some homework to look at. Now, do some research on 432 Park Avenue. Not 432 Park Avenue, I apologize. 157. We'll wait till these guys sort of go out here and we'll try to exit. I'll try to find a revolving door where there's no people. But Check out 157, one of the most record-setting sales at 157. Now, I forget the gentleman's name, but I think it was purchased by a Nigerian billionaire. And it turns out, well, I'll just let you guys read the story because I don't want to dive too deep into it. But 157, do some research on one of the record sales at that building. And it's pretty eye-opening. Marcelo says, do you invest abroad? I don't. I do not invest abroad. Mechi A says, is the vessel open? I don't think so. I think it is still closed. However, supposedly we've been hearing from a lot of the viewers in the chat that the first floor of the vessel is still open. Fred X, what's up? Says, good evening, Tom. Welcome. Good to see you, Fred X. We are walking around here at the Hudson Yards today. Bruce Wayne, I'm not sure about it, but there's a good article, I think, in the Wall Street Journal about it. And I think they confiscated the property. I think they seized the property. It was one of the record-setting sales at 157. Hey, Cynthia's here. Says, wow, it looks so pretty. Good to see you, Cynthia. All right, I'm going to give you guys a view of the Equinox Hotel and Tower. Now, I wanted to briefly read off a list. Right, as we sort of talk about the leaders of this market now. Now, the vast majority of the leaders have actually been coming out of what I call like the value sector. So very contrary to the individual names or stocks that were leading this market during the 2020-2021 bull run. A lot of the stocks that are performing well now are more value plays, established companies that have earnings currently and that also command very lucrative and high dividend yields. So think about the top 5 companies in the Dow. I'll just name a few. Now, I think the number one company in the Dow Jones or the Dow 30, I think it makes about 12% of the indice. I think it's United Health. The ticker symbol is UNH. It has about a 1.23% dividend yield. And number 2, I think at about a 7% weighting, is Goldman Sachs, major investment bank, and they command a 2.57% dividend yield. Number 3 is Home Depot. We talked about them, posted a great quarter. Their dividend yield is 2.33%. And then Amgen, big pharmaceutical company, their dividend yield is almost 3% at 2.73%. Then we have McDonald's at 2.21%, Caterpillar, ticker symbol CAT, at 2%, and then IBM. We actually did an entire stream on IBM not too long ago. IBM has almost a 5% dividend yield at 4.45%. So it's really not a surprise as we've moved into this environment of higher rates, quantitative easing, that a lot of these speculative stocks, so a lot of the Cathie Wood, ARK, Innovation, ETF stocks have fallen out of favor, while the strong companies that have earnings today and that have very lucrative dividend yields are starting to rally and trading near all-time records. And that's why we're seeing the Dow lead the way. Hey, Mike C is joining us. Good to see you, my friend. Vegas 1227 says, what recession? I think you were too negative. Mary Lamb, good to see you. Oh, Cynthia says, I've been applying to IBM. Very nice. Which specific section of IBM are you applying to? Now, back in the day, I had an interview with the healthcare unit of IBM Watson. It was actually sold off to PwC, PricewaterhouseCoopers. Now the Watson unit is actually near Astor Place, where we actually came from last night. Hey, Robert says, I work for one of the companies you just mentioned. Very nice. Hopefully you're getting your fair share of stock-based compensation. Ren1018 says, Tom, did you hear of the story that the furniture company laid off 2,700 workers over text messages and terminated all the benefits as well? I did not hear about that. And terminated all their benefits. I'm not sure if that's legal. I guess depending on what state you're in, right? I think they need to give you a... Well, at least, speaking from New York, I think if a company is going to lay you off, I think they need to give you at least 2 weeks notice and pay you some sort of a severance, right? At least 2 to 3 weeks. I wonder where they were located. Strange. All right, team, let's head back into Midtown. I'll take you guys on one more lap through the shops at Hudson Yards. Oh, Vegas says yes, it's legal. Oh, in Mississippi, yeah, that's probably why. Yeah, I mean, it's a bummer when you see things like that, right? You never want to see anybody losing their job. It's terrible. Hey, David S. is here. Says, great job, Tom, as always. Good to see you, David. Thanks for joining tonight. Melissa 2087 says the shops look great. Yeah, they did a really good job this year. Yeah, Joseph Hardaway says some of these companies don't play fair. It's good to have a backup plan just in case. Yeah, I mean, I always say it's good to work hard. I truly believe in working as hard as you can for the company you work for. But, you know, at the end of the day, don't think for a second that these companies view you as not replaceable, right? Every single person, right, for the exception of maybe a very few, are irreplaceable. So I would definitely always be hedging your bets all the time, 24/7. You know what I used to do when I was very early on in my career, even when I was very, very happy at the particular job I had, every single time a recruiter reached out to me, I always took the interview. No matter if I was looking for a job or not, I always took it. You always take the interview because you never know. You know, follow it through. And as you do a lot of these interviews, you're going to get very, very good and very, very polished at interviewing, right? You're going to brush up on your public speaking skills, your presentation skills. So you should always be interviewing all the time. Even if you're killing it at work, you're blowing it out of the water, you should always be a free agent all the time. Hey, Sunshine After Rain, our good moderators here. Good to see you, Sunshine. UniJ22 says excellent advice. Here, I'll show you guys just one more time in the lobby. It looks really nice here. Patricia Ivory says, you are so right, Tom. My father always told me you were replaceable at a job. Yeah. Now, I do want to be very, very clear here to sort of maybe clarify my statement. In my view, if you're going to work somewhere or work for a company, you got to either be all in or all out. So you should be like nonstop work, especially if, and this is coming from if you're in a sales position, right? So me, I've always been on the sales side of the organization. Let's cross the street here. We have a nice view of the Empire State Building. So you should always be hitting it hard at your job. You should be giving it 110%, and you should be trying to outperform everybody at your company, right? Get around the people who are top performers. Try to learn as much as you can. Never ever stop. But as you're producing for your company, you also need to look out for yourself first. And that means always seeking better opportunities somewhere else and internally at your organization. Because the biggest pay raises that I've gotten have not been from my existing company. It's always been from a competitor that have offered me a better package deal every time. If you stay somewhere too long, you tend to cap out. You tend to have your limit where you tap out. But chances are, if you entertain offers from competitors, right, to a point, you'll, instead of getting maybe the average 2% or 3% annual raise, you may get, you know, a huge 20% bump in salary. You'd be surprised. Edward Adams has never marry a job because they won't marry you. Old timer told me that 34 years ago. I'm retired 2 years this month. Hey, Edward, that's awesome, man. I think that's pretty good advice. And congratulations on your retirement. I love that. Here we have the Edge observation deck. Hey, Bill is here. Welcome. It's good evening, Tom. What's up, Bill? We were talking about the yield curve a little bit today, sort of how I interpret it. Now, we're pretty much inverted all the way across the yield, or all the way across the curve. And MB045 says, Tom, I got scared from changing jobs because I might get shocked with the toxic work environment. I'm currently in a friendlier atmosphere. Now, that's a good perspective. NMB045, you know, I guess, you know, the grass isn't always greener on the other side. I think maybe to a point, right? So if we were to sort of revise maybe what we were just saying, I would say when you're very, very young, you never ever get comfortable at a job. I think the younger you are, the higher your churn rate should be at an organization, right? Assuming you're a top performer, right? If you're blowing it out of the water, let's say if, you know, you're a top salesperson or a top dev, say if you're on the engineering side, you should be turning over positions like once every 2 years. You got to be making a move. Let's say if you start your professional working career at, say, 20, I would say every 2 years max, you should be jumping and looking for like a $35,000 to $50,000 bump in base salary. Now, when you get in your 30s, you know, maybe that's when you want to slow down a little bit or pivot and jump and start your own company or do something like that. Because the older you get, the less nonsense you can tolerate, right? Now that may sound a little harsh, but if we're going to be blunt here on the stream, I think everybody could agree with that, right? The older you get, the less nonsense you could tolerate from somebody. You know, when you're 22, 25 years old, I could eat a lot of nonsense. But, you know, when I'm 35, 40 years old, I'm not going to tolerate some punk, you know, at my job. That was almost an accident right there. Did you guys see that? That yellow taxi tried to cut off the other driver. Love is kind, says Tom. From my experience, being too good and efficient at my job meant I was given more work but never a raise, and always asked for assistance. Those paid 3x more than me, no promotion, no raise. Yeah, so I think that's when you sort of got to make a move, right? And I think that's why everybody needs to learn. I think that the number one skill everybody needs to learn in life is how to negotiate appropriately, right? In a way that is respectful and that's going to get everybody on a good side of a deal. Man, it's really windy. Can you guys hear the wind in the mic? You know, the way I would have handled that situation is you could do something like this, right? You always need to be searching for a better opportunity. So let's say you were making $100,000, right? Your base salary was $100,000 and you were crushing it at your job. You're doing better than everybody, right? Your boss notices that and they keep giving you more work. Well, what you could do is you could request a raise. If that is met in an abrasive nature, well, then you have to relentlessly pursue other opportunities. And once you make it to the final round of the interview, ask the other employer for an offer letter, right? Then you very respectfully request a meeting with your existing employer. You lay the cards out on the table and you say, look, my performance reviews have been higher than anybody in the organization. My productivity has been higher than anybody's in the organization. You know the value I bring. Here's what I need for you to keep me here. I've been interviewing with other companies. Here's the offer letter, an offer for 150. What I would need from you guys to retain me as top talent, and I want to stay here. I don't want to move. I love my coworkers. I love my boss, which is you. I think you're a great guy. But at the end of the day, I need to provide for my family. So I'm going to need a $175,000 base. And if that can't be met, well, then we're going to have to respectfully part ways. But I would much rather stay here, right? You have everything lined up and it's either one of two things. You're either going to get the higher base or you're going to move on to a better opportunity. That's how you close a deal. That's what I would say. Wow, Madison Square Garden looks nice tonight. I wonder why it's lit up all in red. Maybe for the holiday? Interesting. Yeah, David S.'s MSG coming up on the right. I wonder why it's all lit up in red tonight. Yeah, regardless, it looks nice.
It depends on how you have to see it.
Yeah, Ryan, that's a really good comment by Ryan Beck. I think Ryan Beck makes a really, really good point. Let me read that. Ryan says, also, if you have a positive attitude and project that in your work, you are typically held in a higher regard. Having a negative attitude towards your employer will leave you... Oh, shit. Will leave the employer with bitterness. I agree. And that's why, I truly believe, I always hold that standard that you should always do things outside of your job description, but if it gets to a point where you're just getting bogged down and you think the employer's taking advantage of you, that's when you could go to the negotiating table, right? But you should always strive for excellence. I mean, the people that are I would say the baggage at the company are people that show up every day and try to do the bare minimum, right? And just collect the check. Those people, you want to get so far away from those people, you don't even want to have them remotely near you. I just would completely ignore them at work. Hey, AK is here. Good to see you. AK says that's a good strategy. I used the same tactic to negotiate a pay raise before. Yeah, but I think that's the best way to do it, because your first ask is just having a conversation with your boss and requesting a higher salary. But when you do that, you need to come prepared with data, right? Maybe you can make a quick presentation, build a little bit of a deck, and present that to your boss and say, I'm requesting a raise because XYZ, right? If that's met with abrasiveness, then you got to go and interview with people, and then you do step 2, which is present the offer letter from the other company. And if they don't match it or beat it, well, then you part ways. Yeah, it's a good strategy. Edward O is here. Thank you so much for the $1 donation. I appreciate your support as we are standing right here on 34th Street overlooking the beautiful Madison Square Garden. TC, we are going to be starting a more reliable consistency on the newsletter. I just had to make some adjustments, but we will be starting again. Deborah says, Tom, again, if you show me an offer letter from another company, I'm cutting you loose. I don't want someone working for me who doesn't want to be here. Okay, that's fair. Then I would cut loose too. Sparks Carnival says, I read something in HBR that found employees with a more toxic personality have a higher salary. I would like to read that. John says, for sales, where do you recommend applying for jobs over 120K salary with several years experience? Usually in sales, where salaries are above 100,000 to 150,000, tends to be in the enterprise or mid-market sales area, right? So like an enterprise account executive, so selling very complex, long sales cycle, generally in tech or software sales. Yeah, but sort of, piggybacking off of Deborah's comment. Again, if you just cut me loose because you don't want someone that works for you that doesn't want to be there. Well, the first step to that negotiation is I came to your office and showed you how valuable I was to your organization, and you refused to give me a raise. So you left me no choice but to explore other opportunities. And if you want to match that, we could respectfully part ways, and I'll take my job at 175 base. No problem with that. There's no hard feelings, right? No hard feelings at all. Edward O says, you in Manhattan? Yes, we are. So this is Midtown now. You guys are actually about to see I would say the newer old Penn Station. Oh, Mike C, that's a good perspective there. So Mike C says, back in the day, there were several people in my company that were hanging on just to build the pension. Yeah, so back in the day, it's crazy because nowadays the pensions are like a thing of the past, right? Nobody really gets a good pension anyway nowadays. Everything is very, very self-reliant. It's sort of the same thing with a lot of the civil servants here in New York, right? I told you guys when I was about to enter the NYPD Academy, I was looking over the pension details, and it's nowadays, it's not even really a pension anymore that the new police officers get. Everybody likes to think of the pensions of the 80s and the early 90s those are long, long gone, right? Now there's tiers, there's different tiers to pensions, especially in the New York City civil service sector, right? So if you work for the sanitation department, let's say if you work for the fire department, police department, you'll get a pension, but they're not those very lucrative tier 1 and tier 2 pensions of back in the day. These are very, very, I would say, geared towards a lot of self-reliance. You know, more money is being put in by the individual contributor as opposed to before. That's a good point. That's a really good point. Yeah, Michael Joseph says, yes, pensions is why 401k made everybody expendable and workers just walk when they want. Yeah, it's true. I mean, pensions in and of itself is really unsustainable, right? Abdullah, welcome. Deborah S. says third-party unions, question mark. Sean says tips for making big money or investing at 18. I think the best way to making big money is to learn a fundamental skill, right? I think if you really just understand the basics of capitalism, the more money you'll make is the more valuable your skill set is, right? So there's a reason why, you know, some software engineers, you know, at some of the big FANG companies make, you know, 700,000, all these crazy target comps, is because they have a very, very, very valuable skill that they can trade in the open marketplace for a very lucrative salary. So if I was 18 again, I would look at the market objectively and say to myself, where is the fastest growing, largest total addressable market in a very, very fast growing industry that'll probably have about 15 to 20 years of runway. And I think right now, in my opinion, and again, this is just opinionated, I think that's probably going to be cybersecurity. So again, at 18, I wouldn't focus on investing any money, right? Because chances are at 18, you don't have any money, right? I didn't have any money at 18. So I would focus on building skills, right? And that could be anything. Maybe you want to be, you know, an HVAC mechanic and own your own HVAC company. I don't know what it is, right? Maybe you want to be a software engineer. I would spend all of my time every waking hour building that skill. I wouldn't be hanging out with friends. I wouldn't be partying. I would be sitting at my desk coding, trying to be the best software engineer I could be, right? And take that same example with any career, right? Again, that could be an electrician. Maybe you want to be the best electrician ever. Maybe you want to be a doctor, lawyer. I would build those skills, and then over time, you'll make a lot of money. And then as you make a lot of money, you can invest that money in whatever you want, right? But I wouldn't put the cart before the horse. I think a lot of people, especially a lot of young people, they put the cart before the horse. They talk about, oh, how could I, you know, start investing? Why would you want to start investing if you don't have any money? You got to make money first. And in order to make money, you have to learn a skill. You have to get good at something. All right, team, we made it. We made it here to 34th Street, Herald Square. They did a really nice job here at Herald Square here for the holiday. Wow, bit of a wander, says Tom is right. I have made my living in the restaurant industry and started in fast food on the front line. Wow, dude. That's an awesome story. I love that. I always love those stories of just people working hard, starting from the ground floor and just building their way up. It's what America's all about, my friends. But congratulations on your success. Bit of a wander. It's fantastic. And I would also say patience, right? You don't need $1 million tomorrow. What are you gonna do? Buy a Rolex, right? Just chill out, focus on building skills, enjoy the ride. You know, don't keep up with the Joneses. You're on your own path. Just focus on getting a little bit better every day and building a fundamental skill. You don't need it tomorrow. You don't need to be Bill Gates, right? Just chill. You know where we haven't been in a while that I just thought about? We haven't been to Koreatown in a long time. I think we may do one lap around Koreatown. I think you guys are gonna like it. Hey, Brendan O'Brien says Bowery. We were actually at the Bowery last night. That's so funny. We were there last night. Christian S., good to see you. Yeah, Adrian says, I think young people nowadays want to be rich quickly, and that's the problem. Well, I think it's a lot of like, I think it's just the exposure to a lot of charlatans, for lack of a better word. Is charlatan the right word? Right, on like online, so they see all these people, you know, buying all these liabilities, and I guess that's what they want. Iowa Oaks is my HVAC guy, is a younger fellow who owns his own company. His job history is amazing. Learning how to work huge equipment and small, his confidence is able to do the job. Yeah, I mean, you'd be surprised. I think we're going to see a very interesting shift here over the next coming years. So I actually have a friend, his firm, well, the firm he works for, is looking to acquire small businesses that are still owned by, you know, the mom and pop owner, right? This could be a baseline electrical contracting business. This could be a this could be a baseline HVAC business. Any very boring, basic trade business. You'd be surprised at how much these people are making, these businesses. And the thing is, what's crazy is that a lot of them are up for sale. And the reason for that is because a lot of the times their children don't want to take over the business. Oftentimes they want to go work in, you know, tech. They want to go work on Wall Street. They don't want to take over the HVAC business that's been in the family, you know, for a couple of generations. So these things are selling for, you know, 2 to 3 times revenues. And one of the things that you'll notice is within a lot of these businesses, they still run off of pen and paper. It's really, really crazy. So you'll have an electrical contractor that'll be doing, you know, $6 to $10 million in revenue a year, and they'll have no CRM. You know, they'll have nothing. They work off of pen and paper. So, and they do no marketing. So could you imagine if somebody comes in, acquires that book of business, and deploys just very, very basics of, you know, marketing, advertising. You put your customers in a CRM where, you know, maybe you could try to upsell those existing customers. You could probably double the revenue in maybe 10 years. So I think that's going to be a very interesting area of opportunity, because you'd be surprised how many small businesses there are in America that still operate just based upon, you know, pen and paper, no CRM. It's really astounding, actually. All right, we are almost to Koreatown. One more block, we'll be there. Yeah, Tom G says maybe backfire. The octane was too low. I think the bus just ran over something. Maybe ran over a bottle, who knows? Ignacio. No, we use an iPhone 13 mini, and we just put it on a gimbal, just like a basic gimbal. Hey, Dez is here. Good to see you, Dez. All right, everybody, we are here in Koreatown. Now, we're actually going to cross the street because I know we have a lot of new people here, so I want to give a quick recommendation. Assuming if anybody wants to visit New York and goes to Koreatown, there's a very good Korean barbecue spot here coming up in a minute. It's not the one in front of us, the Love Korean Barbecue. It's actually the one next to it. I will show you guys. It's probably packed actually, so it's actually a good time to walk past it. It is called Baekjung, and it is right here. It's fantastic. Hey, Billy Johnson is here, says love this stream. Thank you, Billy. Thanks for joining us. All right, this is it. This is by far, in my opinion, the best Korean barbecue restaurant in the city. Oh, Kote, yeah. All right, so Ryan says, Tom, have you been to Kote? It's a Korean steakhouse. I have not. So I got an interesting story about that. So my friend and I tried to go one night, and on the night we went, we made a reservation, but even though we made a reservation, there was still no seating. It was so packed. I haven't tried that. I'm gonna have to try it. But in my opinion, this one is the best. And it's a really good time too. I'm not sure if anybody's had Korean barbecue. It's like an experience. It's not only about eating the food. It's cool. It's awesome. Anyway. It's definitely a good time. It's a blast. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and hit the subscribe button if you're new. We usually do these live streams about 5 days a week between New York City and Miami, Florida. I think it's been an interesting conversation tonight. A lot of different opinions, which I value a lot, right? We may not always have the same opinion on things, but I'm learning a lot. I'm learning a lot tonight about different ways to approach negotiating, because I think one of the things we also have to take into consideration is the other person's point of view, right? Who's on the receiving end of the negotiation when you initiate, right? And there's many people in the chat that have probably been in the workforce or career for 20, 30 years, and they may respond more favorably to different techniques. So I think it was a pretty good lesson tonight in negotiation. I think it was awesome. I appreciate everybody's input. Touring different places is Tom. Could I have some Korean BBQ food? Absolutely. You know, I just found out what this sign means here. I guess this is Korean. If you go like that, it means love, or like a heart. I just found that out. It's probably obvious, but things tend to go right over my head. You know what, let's actually head uptown. I forgot. Rich Child 9 says, Tom, I live in San Antonio. You asked last night where in Texas. Love that. How is San Antonio from an affordability standpoint in comparison to other cities in Texas? Would you say San Antonio is just as expensive as Austin, or maybe less expensive? Joan K says South Korea is nice. It is very nice, and the South Korea in general, especially Seoul, little rat here, is very clean. Oh, he's coming right at us. Very clean and very modern city. You know, I think we talked about this before, but I think here in New York City, we should adopt the same sort of policy like the subways in South Korea have. So if anybody's taking the subway in Korea, right as you step up to the platform, you physically cannot go. Yeah, sure. Nice to meet you too. Have a good night, man. Walks in Wall Street. Check it out. Thanks. Awesome. Have a good night, guys. Be safe. But as you walk up to the, what's it called? The tracks. You physically can't fall onto the tracks because there's the sliding doors. I think they should do the same thing in New York, because we've been having a lot of problems with people being pushed onto the subway tracks and also people falling onto the subway tracks if they're intoxicated. So I think they should build those same barriers like they do in some Asian countries. No, Michael Joseph, I think he's just trolling. Yeah, they're just kids having a good time, I guess. Yeah, Ryan Beck. We've had some incidents like that this year, especially in the boroughs. Not too much in Manhattan. More along in the boroughs, unfortunately. Or I should say the outer boroughs. Manhattan is a borough technically, but Mike C says, I just sort of gotta play the game, I guess. But Koreatown is packed tonight. It is a Saturday night on Thanksgiving weekend. Ed T says I would freak out if I saw a rat. I think you just get used to it after a while, especially being in New York. Now, I think we actually had a viewer say that New York is not the city that has the most rats. Supposedly it's Chicago. Haven't known that. Never been to Chicago, but... Are you okay?
Oh my God, Eve.
You all right?
Are you okay?
Are you okay?
Thank you.
Are you okay?
Yeah, I'm great, thanks.
Do you want to sit down somewhere over here?
Nah, I'm good.
You sure?
I'm good, yeah.
Do you want me to call him?
I'm great.
You all right?
Thank you.
Oh, thank you. Okay. Jeez. Yeah, that lady just tripped over the grates. That's another thing about the New York City sidewalks. A lot of them are broken and jagged. You gotta watch where you're walking because the subway grates stick up. All right, let's make a push north. I do want to try to conclude the stream at Bryant Park. Hey, Bit of Wander, thank you so much for your $2 donation. I appreciate it very much. Yeah, Mary, that's true. Well, the thing is, the scaffolding tends to stay up for long periods of time in the city. It's sort of like a loophole that the building owners use so they don't have to actually fix the buildings. That's why you'll see scaffolding sometimes. If you want to Google scaffolding Upper West Side, you'll see a ton of articles where some communities actually try to put civil lawsuits against these buildings because scaffolding can sit there for over 5 years. But just as long as that you have the scaffolding on the building, you technically don't have to do the repair work. Right, so instead of spending all the money to do the repair work, they'll just put the scaffolding up and leave it there. Rich Child says, will you be in Miami or New York City for New Year's? I'm probably going to be in New York because all of the major holidays I'm here, right? So Thanksgiving, Christmas, obviously, Easter, just because I spend it with my family and I don't really have any family in Southern Florida. Everybody's here. Yeah, Michael Joseph, we are passing the GameStop. Teresa Diaz, thank you so much for the $2 donation. It says thank you, new subscribers, 25,100 people. That's insane. Well, thank you everybody for joining. Much appreciated. We are growing quite fast here. Yeah, Adrian, we did last year. So last year, we didn't get too close to see the ball drop, but I think we were, what, 43rd Street? And I believe I streamed it as well. That was wild. I mean, last year was absolutely packed in the city. So I think this year will be the same. You know what, since we're on 35th Street, I'll show you guys my second favorite Korean spot. We'll do a quick detour. I don't think I've ever showed you guys before, but since it's Saturday, we covered a lot on the stream. I mean, my God. Action-packed stream. I think it's here, actually. Hanbot, yeah, this place is very good. So my recommendation would be this. When I used to work in the area, I would go get the lunch special here with my coworkers. Very, very good. Hanbot is fantastic. So it's right in here. So just remember, it's on 35th Street, right next to the Hilton Garden Inn. Really, really good Korean spot. And I think there's another Korean restaurant right next to it that is actually a little bit better. And I think they're owned by the same owner too. Sparks Carnival. It says, does influencer marketing really pay off? What is that? Like paying somebody to promote something? Like brands paying LeBron James and stuff? I mean, I would assume, right? I mean, Nike does it. Nike signed LeBron James and all these other athletes for millions of dollars. You know, really quick, has anybody ever taken these Revel electric taxis? JC Trade is here. Good to see a JC Trade. JC Trade, long time no see. I want to get your thoughts on the, 2 nights ago on the live stream. We were talking about a chart I posted on my Twitter. If you want to see it for reference, you could follow at Walks Wall Street. Now, I overlaid the crude oil futures contract onto the XLE. And notice the crazy divergence that we're having right now. You have crude oil, which seems to have topped back in March. And I think the light sweet crude contract is trading at 86 bucks. And we have the XLE trading near all-time record highs. I think that divergence is going to close. I think it's either crude has to rally or the XLE has to come down. And I think it's going to be the latter. I think the XLE is going to have to come down. Brad's brain says, hockey bros ahead. You know, there's if you want to talk college hockey, I think one of the best college hockey teams in New York. Whoa, that guy's taking a chance crossing there. Is Cornell University, which is upstate near Ithaca. And beautiful campus there, by the way. Cornell University, fantastic. I got invited to like a showcase, college showcase camp there for soccer. So I spent a week there. And the campus is so unreal. It's just, it's beautiful. It's really only how I can describe it. Yeah, JS's Koreatown is a pretty dope area. It is. Really fun too. I'd say that's probably a part of the city where it has the most energy. Right there at 32nd Street. Michigan and Cornell, big hockey rivals. Oh wow, Brad's Brains, my nephew's playing hockey for Oklahoma. That's awesome, man. It's such a blast to watch him. He's a freshman. Dude, I'm gonna have to check him out, Brad. Let me take a screenshot of that. You don't have to disclose his name, but I'll make sure to keep tabs on the team. I'll cheer him on. 2 Explore videos is Cornell meh, but we were trained to love it even though other schools are better and way less expensive. Yeah, I mean, it just depends. Give me 1 minute. Yeah, I mean, I guess it just depends on the college comment. Now, I think if you're smart enough to get into an Ivy League school, I would probably go. Right? I would probably go if I was ever smart enough. I'm not, by the way. But if you're smart enough to get into an Ivy, I think that is worth the money. I don't think it's worth the money to go into a ton of debt, to go to just a run-of-the-mill, regular private school. I think that's probably not going to be a favorable ROI. But I think for the Ivy Leagues, right, especially if you're going to be in, specific like an engineering field or something like that, I think the biggest value prop that you'll get there is all the amazing, smart people, not only from the United States, but all over the world, right? The smartest people globally go to these Ivy League institutions. And I think it's just invaluable to do networking at those type of places. So if I ever had the opportunity, I would. But again, definitely not smart enough to get into those type of places. Hey, Dr. Longus is Go Islanders. There we go. Yeah, Ryan Beck. I actually went to a Cornell University home game, hockey game. It was wild, wild, wild. All right, we are now approaching Salesforce Tower, Bank of America Tower. But I think we'll cross prematurely here because I want to check out the 2 lions outside of the Steven Schwarzman building. Wow, it smells really good here. Probably because of all the pastry shops here at the Winter Village. I'll try to take you guys through it. If it's not closed, but it smells really good. All right, quick tip. As we've been talking about inflation tonight on the channel, I would recommend this place. It's called Breezy Hill Orchard and Cider Mill. This is by far the best sort of pop-up shop here. Although it is very, very expensive, I still think it's worth it. But the prices have increased like 100% year over year at least in that place. But I think it's still worth it. FredEx says, wow, it smells really good here. Don't hear that much in New York City. True that. Yeah, any place where they're cooking food live, very good smell. It smells really, really good here. Wow, especially that place we just crossed. You know, you could see the Bank of China from over there. We did do an in-depth topic about the Chinese commercial paper market, and I actually think you're starting to see some of the cracks at least show itself here as it relates to Chinese property market. And it always, in every cycle, in every credit cycle, it always shows up in the commercial paper first. And you know, sometimes it takes a while for price action to reflect. But I think you're going to start to see some fireworks coming out of the China market. Now, if you're wondering how you could track that, any of the Crane shares, China total market bond funds, you could look at. Here is the, what is this? Is this a $50,000 or maybe $500,000 bathroom? Very, very famous bathroom here at Bryant Park. Luxury style bathroom. Yeah, Rich Child 9 says, did you see the protests in China? Yeah, I think we need to be paying attention to that, especially as it relates to Apple, right? So you're having massive protests at the Foxconn factories. And this is just going to continue to fuel the narrative of US companies and even European companies domesticating their supply chains. Now, we've done many live streams about that specifically, but what I would suggest is go grab a copy of Investors Business Daily this week, because the cover story was very well written, and it was all about the supply chain, specifically as it relates to semiconductors and semiconductor companies trying to diversify away from mainland China. But I won't give out the spoiler, but I would definitely check out and read that cover story. Yeah, Jace is crazy lockdown and protests. I mean, the thing is, the problem is, in a zero COVID policy, if you're trying to put that into place, it is very difficult to run a business that way, right? Especially if you're a US-based company that's a multinational. You can't, it's going to be impossible to do any type of forecasting. On the last earnings call, there were two main takeaways. Number one, which we've talked about, which was the 600 basis point hit to revenues due to a strong dollar, right? Now the dollar has actually come down quite materially. I think the Dixie is trading at 106. But more importantly to that, Apple is forecasting that inventories of the iPhone 14 is going to be very constrained due to this, you know, zero COVID policy in China. So I think you're going to see a huge diversification of the supply chain and trying to bring a lot more of that onshore here. Yeah, Jay, it's a good comment there. You know, I think from being in New York so long and walking around, I cannot stand this song. This song with Jay-Z, man, they play that every night, man. Hey, Destructionist, happy birthday. That's awesome. Oh, team, I'm losing track of time here. So we do have to end the live stream. I got to cut you guys loose. But I think we covered a lot, right? We covered a lot. We did a little bit of a yield curve analysis tonight on the live stream. We talked about what a yield curve is, right? The three kinds of yield curve, right? You could have a normal yield curve, a flat yield curve, an inverted yield curve. But most importantly, what does it all mean? And why do yield curves get inverted? How do money managers and institutional investors use the yield curve as a leading indicator for not only economic growth, but also stock market appreciation or declines. Then we talked about the Dow 30, and then we went into some negotiating strategies as it relates to salaries at your corporate job. So if you guys enjoyed the live stream tonight, feel free to leave a like on the video. Hit the subscribe button if you're new. And if you want to connect with us, we do write a free newsletter where we write about the US equity markets, emerging markets, fixed income, and more. If you scan the QR code on your screen and punch in your email, you'll receive it absolutely free, and it is a great way to support the channel. We will be live tomorrow, 8:30 p.m., when we will be doing our Markets a Look Ahead stream on Sunday, where we will be covering all of the major corporate earnings, economic data, and we'll also be talking about monetary policy. So thank you everybody for joining. A different take. Thank you so much. Touring different places. I appreciate it. Sabrina Fair, have a good night. Fred X, Love is Kind, Joan K, Wendy England, Tariq Khan, thank you. Dr. Longus, Joseph Hardaway, Abdullah, Sunshine After Rain, and all of our new viewers, Melissa White, and to the Mighty Bull, have a good night wherever you are, because there's always a bull market somewhere. You just need to know where to look. NMB 045, Natalie, Mike, ATC. Enjoy the rest of your night, everybody. We will see you right back here tomorrow.